Hi, this is Randy Finney with Right Side of the Chart, and this is a market wrap for Thursday, November 1st, 2018. I wanted to do the video before Apple reports. It doesn't matter, the charts we're looking at here are not intraday anyways. And whatever Apple reports tonight, it's going to go up or down, it'll fly back and forth. That's usually the case when they're going to report here shortly at 4:30 or so. And then what's really most important is how the market digests whatever they report and whatever they give on their guidance. And so we really won't have a good idea until tomorrow what reaction may stick. So let's just look at the charts now in advance, give you some levels, and we'll really have a better opinion. I'm still, keeping things light, looking at this point, starting to unwind some long exposure and get ready to get back into shorts. In fact, I started to scale back in today, but mostly it's a active traders market right now, and we still don't have um, any clear sell signals yet for this bounce. And we haven't had any hard buy signals yet, but there are some developments to note. So let's just go ahead and take a look here. First, one thing I'm noting is a lot of potential bullish crossovers on the PPO, very low level crossovers. Those are usually pretty decent buy signals when you get them, especially when you're deeply oversold like this. We had the divergence on the RSI. So, that would go, check mark to the bulls if we get those. But however, sometimes, especially in bear markets, in strong corrections, you kiss those lines, you had it there, and you get a rejection. You kiss them, you get a rejection. So again, Apple will really, unless you're a gambler, I don't think today would have been good to go home very aggressively long or short. Best to wait to see what Apple does because it can go either way. But what is important to note, this trend line right here, let me give you a clean board. Here's a trend line that comes off the early 2017 lows. I have several trend lines here. I think I have that on this board right about here. There it is. So you can see this trend line caught a lot of the reactions throughout the year. And QQQ now, today, a couple things happened. We came back above that key 200-day, 40-week moving average. But remember, today's only Thursday. We have tomorrow. Can and will be a big day. Let's see how the week closes, because that's what all I really care about on that as far as longer-term buy and sell signals is a weekly close. So what you look for there is the 40-week EMA. We'll get to that in a second. A 40-week EMA is the same as a 200-day EMA. So there's the trend line just above as well. And if you can make it out, I have the some EMAs coming in. You have the 20-day exponential moving average coming in from above. We're still well below the 50-day. They're still on a death cross. But you'll get an even better signal if the market were to take another leg down and a 50, 200-day crossover. We call that a death cross when you have a faster moving average crossover a slower moving average, especially some key pairs. So we had the death cross back here on the 20 and 50, but if that 50 and 200 day, that really helps to find a bigger trend. So QQQ is still clinging to life, clinging back to that 200, but it's back testing this trend line at least. And again, I had a couple alternative trend lines. Here's a more significant trend line off the early 2015 lows, and it has some room to back test that. So that's and that would be again up towards the upper end of my bounce target, right around that 178 level here. Probably time to tune that color up there and give it a bright color so it stands out. And again, that's a pretty, very significant level. That's really where we broke down from, a pretty important support level there. So those are levels I'm watching on QQQ this week. On a weekly chart, there's that 2015 trend line, nice and clean, and you can see we're still below that. And today, so far, or this week, we've rallied right back up. There's that 40-week moving average, and look where we parked it today, right there. So tomorrow, we'll either go up or down. Let's see how we close the day. A pretty impulsive rejection off there would be quite bearish because that would be a back test, a kiss of that level, and not good for the market. But if we can get above there, it still has quite a bit of resistance to contend with, trend line and price resistance levels. Let's look at SPY real quick, and we'll keep this video short. Here's SPY, S&P 500 tracking ETF, still well below trend line resistance. Also still has some room to go before it even gets back to its 40-week moving average. So that's where we're at there. Some work to do, definitely cut out for SPY if it wants to try to firm up the bullish case. Again, another pending but not yet confirmed, or we haven't yet had the cross on the PPO, bullish crossover at low levels. We had the RSI divergence, but we didn't have any PPO divergence. Here's zooming in, you can see the 200 days still well below there. So like everything else, the SPY has work to do. Let's look at a few near-term charts. Here's a couple I posted this morning. Let's see, not that one there. Here we go. This morning, here was a near-term scenario for SPY with some targets up there to possibly, it's a pretty nice level around 274.48. So far, we fell a little shy of that today, but you can see here, let's just look at today's chart on a 15-minute chart. Here it is, SPY 15 minutes. So we came close, but we're below that now, and we're starting to diverge. We have room to go up to keep these divergences intact and still have them play out, but they could play out at any minute now. So I'm referring to these here on the 15-minute chart. So it might look like this if we, gap down tomorrow for whatever Apple does and sell off, or we could push up there, and that's a pretty significant level, and I think an objective shorting area. QQQ, well, let's look at the chart I posted this morning. Okay, in the trading room today, when the market opened day, we had a sharp sell-off initially, a lot of, sharp swoon down right up the open, and I posted at that point in time right there that we had hit the golden trend line to come in for another back test of that. So as soon as I got a chance, I mocked up this chart and gave some profit targets or near-term scenario where Apple would head today, and that would be up here. Now, when I had the reversal point, that's really where the, my opinion, where the tomorrow line would be. In other words, that we'd run up here at about 171, 172, 171.95. Where's is exactly where that line is. So we'll call that 172. You can see it's a pretty well-defined support and resistance level, and you can right there's a little space above, so that's where that line could have been up to as high as 172. But there it is, lots of gaps. And again, that was this morning. So this was, for at least a day trading op. It's, could have went either way, but that's what it was looking like today. I figured we'd get a little more strength, at least earlier in the day, and the strength actually went into the close. We didn't see a lot of profit taken on Apple. And I have a couple boards, but there it is. There's that 175. 171.95, 172 level, closed just a hair above it. So from here, if that scenario continues to play out, which I'm leaning to, but not aggressively, because like I said, there's some things in the charts and a lot of momentum here. And again, it's a crapshoot. I think when Apple's out of the way, we'll have a green light to let the markets do what they want, let the technicals play out the way they want. When you get these big market-moving earnings report, it can go either way. And again, it's not the initial reaction. We'll let the dust settle. But if we do have a very impulsive rejection here, and Apple somehow gaps down tomorrow, sells down hard, it will most likely bring the rest of the big components in QQQ down with it. And that would also be a rejection there, as I showed you, around the 200-day moving average, 40-week moving average, and could give us some pretty bearish technicals by, if we close tomorrow down very big, we'll have those foiled bullish PPO crossovers. We'll have rejections on the back test of quite a few price resistance levels, trend lines, and things like that. Okay, and to conclude this video, I'll just talk about one other stock here, and that'll be Amazon. I made a mention in the trading room today. I was watching the, I very closely monitor what I call the FANG stocks, FAAMG, Apple, Microsoft, Amazon, Alphabet, and Facebook. And those five alone account for the bulk of the returns in the Nasdaq 100. And then sometimes I'll call it the FANGy stocks. Add Intel in there. That's the sixth largest component. Usually, I don't know if the numbers have changed recently with all the big drops we have. A lot of people still like to use the old FANG with an N acronym. I replaced that with the M, but Netflix. Now, here's the thing. Amazon, and I pulled the numbers today, is roughly a 10% weighting in the NASDAQ 100 and in QQQ. So 1/10 of the returns come from Amazon. And when I look at the top holdings today, Apple did close up somewhat respectable 1.46%. But again, they're going to report. That's just pre-earnings noise. Microsoft was down. Alphabet was down today. Facebook closed down. The only standouts in the top 15 or a dozen or so components of QQQ were Netflix up 5.16 and Amazon up 4.26 and Intel. Intel was up 2.86. Now, Intel and Amazon and Netflix collectively make up about 1/3 of the weighting of Amazon. They make up about 3% or so, a little over 3%, and Amazon's almost 10. So what I'm getting at here is Amazon pretty much did the bulk of the heavy lifting in QQQ today. So, okay, good. You can say, sure, certainly had a heck of a sell-off. But look what it came back to. This big 200-day, 40-week moving average closed right on there today. In fact, I pointed out when we weren't even there yet, the 200-day came in at 1658.35. We closed at 1665.53, within basis points of that level. And it's also price resistance somewhat, not a very significant level. And again, this doesn't mean we can't go through it, but it could mean tomorrow if we fail here, that's a back test. So you had the top of this candle here, there's a body of that candlestick there, and the bottom of this candle right here. So something to note that this big rally today in Amazon, may be it for a while. If it can clear that, there's really not a whole lot of resistance up here to about 1766. But let's see what happens. Again, indicators are turning up. We were very oversold. So you're going to get a snapback rally sooner or later. This one was not a surprise by any means, but I'm still leaning towards another thrust down in Amazon, and that could begin as early as tomorrow because it's now back tested, and it may come up a little higher. So like I said in yesterday's video, there's a whole range of potential bounce targets, and we'll probably have a better clue early next week as to where to start layering back into the shorts that we closed out earlier this week. And to conclude, since we're still on Amazon, just to cover everything, the potential bullish outlook too, and to show that not every key trend line and moving average has been broken. This is a weekly chart, Amazon. This is a very important trend line from early 2015 right here. And you can, I show you all the divergent highs in the weekly time frame, 32% drop, 14% drop. And this one I haven't even had time to measure out yet. I've had this chart marked up like this for quite some time, including that trend line we just hit, about a 25% or so drop. But point is, look, we've hammered off there. Look at that doji. Look at that nice hammer. Doji candlestick to come right back to that 200-day. So this is what I call, we're pinched between support and resistance. Bullish that it held that trend line, very bullish, especially with that big doji type candle so far. If it needs to follow through, any single potential bullish or bearish reversal candlestick, I always want to see follow through to the upside. So in this case, the week's not over. We'll see how this one finishes. All the better if they could get it back above the 40-week moving average by a comfortable margin, not just a hair. And if so, then you want to see follow through green candles in the coming weeks, or at least one green candle, if not more, to confirm that. And that would be a successful test of a long-term trend line, and Amazon could rally. If not, you're looking at a failure because, like I always say, resistance is resistance until unless broken. So let's watch that 40 weeks, see if we reject there. And of course, support until unless broken. So let's see if that support level goes either on a big intra-week move or on a closing weekly basis. So that's where we're at. This market's clinging. Some things are still clinging to key long-term support and trend lines. My longest term trending indicators, as I went over in recent videos, are still bullish for now, but there has still been a lot of technical damage done. Excuse me. A lot of technical damage has been inflicted on the market and some key stocks recently. So despite the rally we've had this week, they're not out of the woods yet. There's a potential there, but they're not out of the woods yet. And if we do turn down at some point, if we are going to take another leg down, as I still suspect by the end of this year, or it could happen, it could start tomorrow, as early as tomorrow, or it could be a few weeks out from now. But when it happens, it'll probably happen pretty quick and with a vengeance, like we've seen recently, because the market doesn't like to make it easy for anybody. They don't make it easy for longs to get out when they want to be out, once they realize that things aren't going their way, and they don't make it easy for shorts, especially I'm talking about on a downside, on a correction. They don't make it easy for shorts that were waffling and didn't want to get in when it was the right time to get in, and they do that by opening down with a big gap or having a very sharp intraday move down that just smashes right through a lot of support levels, and before those longs can jump out or the shorts can come in with an objective entry, it's denied. And that's exactly what happened on this last leg down, for the most part. So all right, let's see what Apple does, and I'll follow up tomorrow, maybe in the morning if there's anything big. If it's not anything where we don't have any clear bullish or bearish developments, I'll just let the dust settle and either do an update, midday, or most certainly by the end of the day for a weekly market wrap. All right, this has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.